Okay, so for those of you who don't know me, my name is Steevie Soucie. I am a licensed sales representative with the Volpe Alcorn real estate team at Keller Williams Realty Centers. And this is Rob Townsley with Oriana Financial. Rob?
So yeah, just to give you guys a bit of background, I've been in this business for 20 years. I do a lot of investment in real estate, do work specifically with first-time home buyers. Obviously got the experience in the background, but you'll see that as we go through the presentation, the things that we can definitely do for you guys. In this here.
Okay, so a little bit about myself and my real estate team. I've been in the business for about 4 years now. I was an assistant beforehand to another top producing agent in the Georgina area. And then I got my license and decided to take on the sales side of things full time. And I've been with the Volpe Alcorn team pretty much from the very beginning. I've been with them for about 3 years now. We are a very young team. We definitely hustle. We're very tech savvy. We're just kind of up to date with the way of the world now and the technology and social media and just everything that you sort of, need to be on top of to be successful in this industry. And yeah, I might be a little bit biased, but I think we are the best real estate team in the area.
Absolutely. So there you go.
Okay, so the 3 questions that we are going to answer in this presentation is, do you feel overwhelmed when thinking about your first home? Do you want to know if you are saving enough money for your down payment? And do you want to know the first step to becoming a homeowner?
Perfect. So what we're going to do is we're going to step into the 3 insurers that we have in Canada. So there's CMHC, there's Genworth, and there's Canada Guarantee. Most people have heard of CMHC. That's the main one that's out there. And just to give you an idea, CMHC is the government, it basically acts on behalf of the government. They're the one that sets the guidelines out for everybody to help first-time home buyers get into the market. So they guarantee the mortgage for the bank. That's is what they're doing. So you pay for the insurance. The bank is the one that gets the guarantee. And that's why you tend to get lower rates if you're putting down less than 20%. Okay. Now there's 2 other private independent insurers in Canada, which is Genworth and Canada Guarantee. Genworth is a very, very large insurer in Canada. Canada Guarantee is also very strong too. But they're private lending, they're private insurers, which is great. They're not government regulated. They do tend to follow CMHC's rules, but they do act independently and can decide what they want to do on their own. Just to give you a good idea, so back in the beginning of June, CMHC, effective July 1st, changed some of the guidelines because they felt that the market was not stable enough for the current environment, right, with the COVID. So what 2 of the main changes they made, which really affected first-time home buyers in a negative way, is they wanted to see, all credit score applicants must be over 680, maximum total debt servicing ratio, which we're going to get into shortly what that is, was being lowered from 44% to 42%, gross debt servicing ratio from 39 to 35. The good thing is the 2 other insurers, Genworth and Canada Guarantee, did not follow suit. So nothing will technically change. If anything, CMHC is going to probably lose a lot of business after July 1st because, there's nowhere else really to go, right?
Yeah, and we think that, it's a very real possibility that CMHC might end up backing off.
Very possible, yeah, because I can't see after a month or 2 of them not generating any business or any insurance business.
Yeah,
you're going to find a lot of the lenders, a lot of the banks are not going to be sending anything their direction until either they back off or something changes, right?
Yeah.
So what is the TDS and what is the GDS? So we're going to go through what these 2 things mean so you can get a good idea of how we base an approval. So as a mortgage broker, there's 2 real things that we're looking for. So the GDS is the gross debt servicing ratio. And what it does is it includes everything that your mortgage would have in it. So it's your mortgage payment, your property taxes, your heat. If you have condo fees or maintenance fees, that would be included in that gross debt servicing ratio. And the maximum that we can go is 39%. That's as high as we can go, okay? The total debt servicing ratio is all of the above, but it also can include your car payment, your line of credit, your credit cards, your any other outside debt that's being added onto there. And that goes up to 44%. So it doesn't take long to add up when they add this up. So I want you to think of it this way. So most people, we say these ratios and they don't really understand the whole concept of what it means. So I'm going to put this in a very easy perspective. if you were making 100,000 gross income per year, what they're saying is that 44,000 of that can go to your total debt servicing ratio. Okay. So that means $44,000 a year will go towards your mortgage payment, your taxes, your heat, your student loans, your credit cards, your line of credits. The remaining 66,000 that would be out of that 100,000 gross is going to be going to your taxes, your food, and so forth, right? But they allow up to 44% of your gross income to go to total debt, or 39% to go towards the purchase of a home. All right. And that's key, because they say if you go over that, then really you're going to be struggling. So they want to make sure you do stay within your means. It's one of the reasons why we also have the stress test in Canada. It's another way to regulate and control what people are spending. Okay. So let's talk about the 4 steps to becoming a first-time homeowner. First step is obviously you want to do the pre-approval. You're going to want to meet with a real estate agent. Then you're going to go out and find your first home, and then you're going to make an offer and negotiate the deal. Okay. I don't know if you want to add anything on to that, Stevie, or not, but.
No, though, that's the steps for sure.
Perfect.
Oh, actually, I would add on, sorry, just meet with an agent. So something I would suggest is 100% as a first-time homebuyer, make sure you are working with your own agent. I find a lot of first-time homebuyers will end up just calling every listing agent off the sign. And I think there's a misconception that using the listing agent will get you a better deal, but that's not true. They are working in the best interest of the seller. They are trying to get the seller the most amount of money. They are not working in your best interest. So you definitely want to have your own real estate agent, okay? They are gonna negotiate on your behalf and look out for your best interest. And as a buyer, it does not cost you anything to use a realtor. So definitely get your own realtor.
Yeah, it's definitely, actually, that's an excellent point. Totally forgot about that. But, you know, if you are doing there, make sure you have your own personal representation, not representation of 2 people.
Yeah.
Right? Okay. So the pre-approval process. So the first step to home ownership, excuse me for 1 second here.
Yep.
First step towards home ownership is to have a consultation with a mortgage agent to see what you can afford. So keep in mind, mortgage agents do not charge fees. They only charge fees if it's a private lending or something in that line. But if we're going to take you to your typical A lender, which is your banks, your big 6 or lenders in that line, they do not charge a fee. We do get paid by that lender. So getting pre-approved does not cost you anything, like I just mentioned. So when using an independent mortgage broker, we also have access to several different lenders. So keep this in mind too. Not every mortgage is built the same. So we try to find one that fits what you're looking for and what you need. So it's not always about the rate. Maybe something in there with a discharge penalty. Maybe you're looking for a different term. Maybe you want to port it down the road. The thing is most people can't predict 5 years in the future. And that's why we're here. We're here to try to find the right product for you, the one that works. Okay. Serious. Okay. So what you need to be pre-approved. First thing you're going to do is your proof of income. And we're going to go into a lot of detail on each one of these 3, just to give you an idea. You do need down payment and closing costs, and you need to have good credit history. So let's talk about the income confirmation. And there's so many different types of income. So everybody's a little bit different. And we get this quite often. It's like, hey, all I had to do was show an employment letter and a pay stub. Well, depending on how your income source is provided or how you earn income is going to depend on the documentation. So what I did here is I wrote down the different types of income and the different types of documentation that may be required. So something to be prepared for. But different types of income can easily include salary, hourly, commission, part-time, pension, self-employed as being big. Some people get bonus income. And just recently now we're able to add the child tax benefit as a source of income also. You may even be collecting spousal benefits or child benefits of like through matrimony, somewhere in that line. Documentation. We're always going to be looking for employment letter, pay stub, regardless of where you're at. We might want to see bank statements, 2 years notice of assessment. Make sure you don't have any taxes owing, your T4s, T1 generals, business statements. Again, a lot of this depends on your type of employment. So if you're just a salaried employee, we're going to be looking for employment letter and pay stub. Probably that's it. Right? If you're self-employed, we're probably going to be asking for just about everything that's on that list. So it really depends. And this is where you need to talk to your mortgage broker so you can understand what to get ready up front before you even start doing the shopping process. All right. So other income alternatives and purchasing options, so maybe you don't qualify with income, we can look at a co-signer. Another thing that's been added recently is you can also do a guarantor, which is a great option. Something, by all means, reach out to Stevie or myself, and we can explain the difference for you and what the advantage of the guarantor is. You might be looking at a second job, something to earn extra income. Joint ownership has become something really big lately just because the price of homes have been getting so expensive. It's very difficult to get in with one income. So sometimes you might see two families jump into a house together, or a brother and a sister, just something to get your foot in the door. Okay. And that's key, to just get your foot in the door, start building the equity. Look for a smaller property, something you can rent out, right? Maybe something a little bit further north. That's another way to get your foot in the door if your income's not high enough. And then rent where you are. Okay, so where do you get your down payment from? So we have the savings, or your tax-free savings account, which has become very popular lately. Gifts from family member. And we also have the RSP program, which we'll discuss each one again. So let's talk about a purchase price under $500,000 and just give you an idea what kind of down payment you require. So if you're purchasing a home under 500K, you only need 5% down. So there seems to be a misconception where everybody thinks you need to have 20% or more. Yeah. If you're a first-time home buyer, you only need to have 5% down on the first 500,000. And just to give you an idea what that cost would look like, if you were to purchase a home at 400,000, you would need a $20,000 down payment. That's your 5%. And then you would have closing cost of 1.5%, which is 6,000 for a total of 26. Okay. But let's take a look. If you were to purchase something over 500,000, what would be your minimum down payment? So for the first 5% or the down payment, so the first 500,000, you would need 5%. It's anything above 500,000, it's 10%, and you still need your 1.5% closing cost. So let's just take a quick look. So if you purchase something at 600,000, your first 500,000, 5% down, which is 25. And then you have 100,000, which is 10%, which is 10. So that means for a $600,000 purchase, you would need 35,000 down. Okay. Plus your closing cost of 9, that's $44,000 you would need to have saved up in your account. Okay. So let's talk about how we can do that. And the RSP is one of the best tools to do this. So just one thing before we get right out there, make sure you do talk to a professional before you put your money into an RSP. Like, it's not necessarily something you'd want to walk into a bank and just say, hey, I want to contribute. Talk to somebody that knows how the RSP program works, okay? Because it really is, to take advantage of it, you have to have the right income. You need to be in the right source of funds. You don't want to get caught into a lot of fees when you're trying to withdraw the money out. So there's questions there that you should be asking to make sure that you're doing the right thing. So what is an RSP? It's a registered retirement savings plan. It was basically put out for individuals so that they could save money, put it in there at a high income rate, and then take it out at retirement when they're at a low income tax rate, okay? The advantage is that we can also do this when you are buying a house, okay? So the government's allowed us to take out $35,000. You will contribute it back. We'll get into that. And it just gives you a great way to get into a house. So I'm going to talk, I call this like a down payment accelerator. If you ever want to speed up your down payment process, and here's a good example of why. If you were to put $10,000 into an RSP today, you'd at a 40% tax bracket, you would get a $4,000 tax rebate when you file your taxes the following year. That would give you $14,000 now for your down payment. Okay, so that's a huge savings, like a great way to actually turn that 10 into 14. So 40% return on your money. Mm-hmm. So must be in the RSP for minimum 90 days before you can withdraw it back out for the home buyer's plan. You must be obviously a first-time home buyer because they're the only ones that can use this. And the RSP is to be paid back over a 15-year period. Okay, so there's a lot of advantages to this also. And again, this is where I would consult with a financial planner just to make sure that you're taking advantage of all the rules and you understand everything going in. But it is a fantastic program. So, 10 years ago, this was heavily used. Tax-free savings account came out. Now it seems to be getting neglected, but bring it back on the table. If you want to get back into the housing market, this is a great way to increase your down payment and do it quickly. Okay. We've had people who've been 2 years out from buying a house, went into the RSP, and then they're buying 8 months later. So it can make a big difference getting in the door. So credit history is something also really important. You want to make sure your credit does stay clean. You want to check up on it. You can use things like, Credit Karma and all these other companies that are out there to free just to keep an eye on your credit. Just keep in mind they are soft pulls, so they aren't 100% accurate, but it does at least give you a good idea to make sure that nobody's tapping into your credit. Ideally, we like to see a minimum credit score of 680 for the main applicant. Now, we can go down as low as 600, but 680 is where you really want to see it. Lenders also just don't look at the credit score. So if you think your credit score is at, say, 700 or 750, there's no reason why you should get a mortgage. Keep in mind they do look for some other things. So one of those things they're going to look for is a 2-year credit history. So if you've been out and spending money, can you handle a credit card without going over the limit? Do you make your payments on time? So those are things that they're going to look for on your credit bureau. Is the limit more than $2,000? Because if the limit's under $2,000, it doesn't show responsibility. So we want to see limits over $2,000. So car payments, car loans tend to be really, really good for this. Line of credits are good, student loans. These things really establish your credit in a really, really good way, okay? And so do credit cards. Just don't go over, I wouldn't go any higher than 50% of the available balance, like available limit that you're allowed. Next thing is you have to have a minimum of 2 activities. They don't want to see you on there with 1 credit card and that's it, because it doesn't show again that you're responsible with money. So they want to see it. So sometimes I know a lot of people say, hey, I don't want to have 10 credit cards, 5 credit cards. Unfortunately, that's the best way to establish credit. So if you're one of those guys that like to just use cash and I don't want any debt, sometimes a little bit of debt is required in order to build up your credit worthiness. Okay?
Yeah, that's something to definitely note on. I feel like a lot of people think that if they don't use a credit card or they have it, but they never put anything on it, that their credit must be great and whatever. But if you're not a credit seeker, it can actually work against you when it comes to getting a mortgage. Like you need to have credit history.
It is, and it can work against you. And we've seen some credit bureaus come in and there's like no credit history. And it's like, well, you need to establish. So even if you just get a couple of credit cards, pay for your gas on it, pay it off at the end of the month, that will establish your credit very quickly. Okay.
Yeah.
All right. So we have some other home buyer incentives. We talked about the RSP where you can use up to $35,000, but we also have the land transfer tax rebate for first-time home buyers up to $4,000. So again, something like this, reach out. We can explain it a little bit more. We can do the calculation. There's tons of calculators online that will show you your land transfer tax rebate. There's also one up on my website. Stevie, I'd be surprised if there's not one up on yours. Hopefully there is. But just in summary, so we're just going to go through what we talked about. So what do you need to get pre-approved? So we talked about the income, the credit, the down payment. Where do you go to get pre-approved? The advantages of the RSP. Again, guys, don't neglect it. It's a great tool. And we're going to talk about the first-time home buyers incentive with the land transfer tax. But I'm also going to talk about a program that'll help you get into a house a little bit quicker. Something that was created not too long ago that's helped quite a few first-time home buyers speed up the process and get them focused with a goal. So what we've done is we've created an action plan. So this personalized plan, it's tailored to each and every one of you. Yeah. We do work on the pre-approval right up front. So what we do is we want to reverse engineer it. We want to find out what you would qualify in a year from now. What is your purchasing price? Where do you want to buy? What are you looking for? We take that and then we calculate what the down payment and the closing cost would be. We budget it, and then we give you a timeline when you'll be able to reach that goal. And a lot of people are very surprised when they do this because they might be thinking, geez, I'm 5 years before I'll ever buy a house. Well, we tend to do these plans. We find out they're actually maybe 6 months or 18 months out from buying a house, right? If they stick to the plan. And, there's a lot of, when you have something to focus on and work on, these things really do work. And like I said, we've had quite a few people closing this year just who have started the plan last year.
Yeah. There's a lot of people out there that make great money and have the capability to be a homeowner in a short amount of time, but sometimes they just need a little bit of help managing their money. Right. I think that's one of the biggest problems, especially for all young people. If you just have someone holding you accountable and you have a goal that you're working towards, it helps a lot.
Well, and absolutely, because the education was never actually ever brought out there. And unfortunately, a lot of the stuff we see on Google and Facebook, sometimes it's mixed information. It's not accurate information. It might work for some, but it might not work for others. They try to throw everybody in the same basket. That's why we try to do this with each individual. Where are you at? How do we reverse engineer it? How can we work it? Yeah. It works really good. And this is kind of steps on how we do that really quickly. But we do the basic pre-approval. So it's based on your income, your debt, and then we determine the purchase price of what you'd be able to purchase, okay? We come out with a down payment. So once we've determined a purchase price, now we know what you need to save and how much money you need. So now we have a goal, okay? So once we have that, we can also take away your approximate monthly cost today. We deduct that from it, and then we come out with what you should be able to put away, right? Just as if you're basically carrying a house today, is how we do this. And that's how we work on your savings and your down payment. So the carrying cost of a home determines your monthly savings. So it gives us a really good goal to work with and how quick we can work to do it. And then we prepare a budget. So I find this to be one of the best pages of all of it, because at the end of the day, if you're going to buy a house, you need to almost be on a budget, because now you've got the responsibility of just not your car payments and your credit cards and your student loans, but now you've got property taxes, you've got home maintenance, you've got mortgage payments. So this actually puts you in that scenario as if you're doing that, and we set you up front. So when you buy that house, financially nothing changes.
Yeah.
Right? So
yeah, because it's, you know what, one thing is saving for that down payment, and I think a lot of people, that's what they focus on as first-time home buyers, is that down payment. But that's just one thing. Once you actually get a house, you want to make sure that you are able to afford it, and you know, month to month, you're not going to be struggling or, you know, whatever. You just want to make sure that after you save for that down payment, you can still continue to afford that house on a monthly basis.
Yeah, and that's what this budget does. It just puts you on track as if you're pretending to buy a house today. And then if you can't make those payments today, then you're definitely going to have a hard time doing it when you buy a house, right? So we want to make sure you're in line to do that. And then we do a result timeline. So this actually shows your savings in the down payment, accumulate and what it should be, and where the goal is, so that you know exactly where you're going to be and when you can purchase that home. So I can pretty much tell you, hey, you know what, December 2021 or 2020, you're going to be ready to purchase a home because you'll have X amount saved up. This is what we've done. And it gives you a really good timeline to work with. So you've got that goal to target with, and you've got a date to work with. So we also have a commitment, a bit of accountability. So we do like to follow up with you. We want to make sure that the plan is working. I want to make sure that you're staying on track. So one of the good things, like as a financial advisor myself, I try to do a lot of the investments on my end because it's very easy to track whether you're missing payments, whether we need to adjust. I'm on the phone with you all the time. But there's also other ways we can set this up, but it does give you a good guide right through the first time home buying process. It also makes sure that everything is set up accordingly so that you're not struggling when you do go through it. Because a lot of first time home buyers, this is a very new process. It's a big purchase. It's probably going to be your biggest purchase you'll ever make. So you're trying to go through this learning curve. We want to try to take away a lot of that pain, and you know, your statements are ready, your income's ready, your credit's already ready to go. So there's no surprises when you just step in and start, right? You're already set up. One big thing with this too is we're also here to try to help you build wealth through real estate. So we don't want to stop with just the first time home buyer home. We want to look at also down the road where you can maybe invest into rental properties, you know, start to accumulate wealth, because it is the way of the future, right? So you got to start somewhere, get your foot in the door, and then you start building the equity. We can work off that equity, and you do it again and again and again. Okay, so there's lots of ways to do that.
Yeah.
Okay. So I want to thank everybody for listening. If you have any questions, please reach out to Steevie. She's great. She can answer all your questions, especially on the real estate market. If you have any questions on mortgages, by all means, reach out to myself too. My email's there, phone number's there. And if you have any questions, again, just reach out to us. Steve, do you have anything to add?
No, yeah, that's it. Just any questions, comments, concerns, whatever. Both of us are very easy to get in touch with. You can reach us both pretty easily on social media, call us, text us, email, whatever you feel comfortable with, and we're happy to answer any questions.
Perfect. All right. So I just want to thank everybody for listening, and hopefully hear from you soon.